proceed to introduce the session. So, like I said, welcome again to the Community of Practice Dialogue. We normally host these convenings on a monthly basis, and today we are going to be focusing on financing innovation and entrepreneurship initiatives in eCooking. This is a series that we started last month. So last month we had a convening with the Equity Group Foundation. This month we are featuring Bettervest, and we think that this series is really beneficial for the community of practice because as you all know, that the small scale entrepreneurs, they faced the challenge of finances when it comes to scaling some of the eCooking initiatives that they are involved in, and even entrepreneurship. So having this conversation is really instrumental for the sector as a whole. So yeah, that's why we are having these sessions. So for the sake of people who are new, and of course, Emna, I'm very sure you're joining these convenings for the first time. So the eCooking Community of Practice is usually convened by around 5 organizations: GAMOS East Africa, African Center for Technology Studies, Kenya Power, and Clean Cooking Association of Kenya. And we have been supported by Modern Energy Cooking Services Program. So our goal is just to bring together the clean cooking sector and the eCooking sector, so that we are able to accelerate and advance eCooking agenda within Kenya and of course East Africa and globally. So for this session, we are just going to be focusing on one of those thematic areas or one of those issues that has been highly highlighted by some of the entrepreneurs we are working with, people, sector players. So within the community of practice, we have policy makers, we have people from the government, we have people who are innovators working in the manufacturing industry for these appliances, and finances has always been that one issue that has been raised a lot. So we thought that it was important to have this conversation. So like I said, we are going to be focusing on financing innovation and entrepreneurship for eCooking, for eCooking sector. Yeah, so after giving that brief discussion, because I don't want to delve deeper into it, a lot of juice is going to be provided to us by our speaker today. So I would like to take this opportunity to introduce our speaker. And even as I introduce our speaker, I would like to encourage us to also introduce ourselves on the chat, because this session is just roughly 1 hour, 30 minutes. So having to do all the introductions will take time. So we'll give this opportunity to introduce our speaker, but you can also introduce yourself on the chat. So today, Ms. Emna will be our speaker. She's a client acquisition manager at Bettervest, where she's specializing in fostering partnership and connecting with project owners seeking debt financing for their renewable energy projects, and that's why we thought she was important for this discussion. So she collaborates with companies to explore some of the opportunities for marketing their debt investments, offering Bettervest crowdfunding community. Prior to joining Bettervest, Emna served as a credit risk management specialist, focusing on the Maghreb and Sub-Saharan Africa regions. And in this role, she was responsible for credit risk analysis and monitoring the portfolio of debt investments. Yeah, those are some of the challenges of having a meeting in a public place. Apologies. Yeah, so her journey into impact investments began following the Tunisia revolution in 2011, leading to active involvement with NGOs dedicated to social entrepreneurship and sustainability. So she'll be representing Bettervest in this event. And yeah, like she said there, she's really looking forward to connecting with you people and of course us to drive the meaningful change in the industry by expanding financing opportunities. So at this juncture, I would like to give the floor to Emna. So Emna, please take the floor. You can add some information if I've missed anything, but yeah, please, over to you.
Thank you very much, Cyprios, for the kind introduction. That's complete. I would say I'm personally invested also in the topic because I worked through my work with Bettervest. I also got to meet entrepreneurs, and it makes it even more exciting to see how much impact can be achieved by financing and investing in these early stage businesses. So I believe you will be moving through the slides, right?
Yeah, but you can also do it from your side.
Ah, okay. Ah, I
Yeah,
see now.
just in case
I
I
haven't
need
done it
to.
before. Okay, I will do it on my side then, easier.
Yeah, I can stop sharing,
Yeah.
please. Yeah, it's fine.
Okay.
Thank you.
So for this presentation, the goal. You will stop sharing.
I didn't stop.
Can you put it back on, please? Actually,
Oh, all right.
sorry.
No, it's fine.
So I was saying that for this presentation, I wanted to focus more on answering your specific questions later on. So I will try to make the presentation structured in a way that I share with you the main framework, let's say, of crowdfunding as a solution to finance innovative and growing projects in Kenya and East Africa, specifically to the eCooking sector. But of course, if you have any specific questions, you can ask them at the end of the presentation, and I would be very happy to answer them as well. Bettervest was started 12 years ago, specifically for the purpose of financing the gap that was identified in the financing of projects that have a proven business model and efficient management of operations, but are too small still for traditional financing through banks or other stakeholders. So the founders, a team of engineers and business people as well, came up with this idea to make a crowdfunding platform specifically for renewable energy projects. The project size can be as low as 100,000 euros in terms of debt. So when I say project size, it's not the company itself, it's how much debt financing the company needs to expand its operations, invest in working capital or in CapEx, and hopefully scale the business. The first problem that was identified is that since the companies that are providing these innovative solutions are still small, they were facing very high interest rates and sometimes even cut out from traditional financing solutions. And at the same time, there's a lot of people who are interested in supporting and believe in these companies and in the impact that they provide. So they created Bettervest, and it's been a project running now, a company running for 12 years now. And I specifically selected for today 2 case studies that we will discuss later on in the eCooking sector to also better illustrate. I believe an example is always better to illustrate the type of use of funds that can be financed through crowdfunding, but as well the structure that and the timeline also to apply and get hopefully a loan through the crowd. I heard someone. Okay, maybe it was background noise. Yes, okay, so the project size varies from 200. I hear myself in the background. Would you be so kind to mute yourselves? Okay, thank you. And now it's a lot better. So the project size specifically for eCooking sector, actually, and that's why one of the reasons also we are very happy to present today is can be as low as 100,000 euros for eCooking, specifically in Kenya and Uganda, because we actually have partner, Energy for Impact, that provides a grant to incentivize Bettervest and to support Bettervest in the analysis and marketing of projects that are in eCooking sector. So usually the size of the projects for us is at least 300,000 euros, but mostly in the range of 500,000 euros. But specifically for Kenya and Uganda eCooking sector, it can go to 100,000 euros. Here, as you can see, the here we listed a little bit some types of data about the term loans. Usually the loans are around 6 to 9% of interest rate to the crowd. The terms can be from 1 year to 8 years, and they are usually with one repayment per year from the project owner to the crowd. What specifically differentiates traditional crowd lending and crowdfunding from the Bettervest structure is the ability, is the use of a German SPV, or actually now we have a Kenyan SPV to reduce the costs. And this use of an SPV between the borrower, which is the final project owner or the company in Kenya, for example, and the crowd, who are the investors in Germany, the use of this SPV allows us to provide more securities and incentivize the investors in Germany to put their funds and believe in this project and support it. This is more of a regulatory structure, let's say, and we found that since we implemented this structure with the SPV, more and more investors are willing to invest in our projects, because they see that the companies also provide securities such as, a pledge of the assets that are to be financed, sometimes also pledge of land or shares of the company. And we have seen a lot better repayment rates also. So yeah, this is the differences between a traditional crowd lending and Bettervest platform. And this is also one of the reasons that we are able to fund the projects quicker, since we can provide these securities to the project owners. I will not focus on the impact. I think you are better placed to talk about the impact than us here. I wanted to focus more on the case studies so that I can better explain the kinds of use of funds that are allowed. I think this is one of the key questions probably that you will face as you apply for crowdfunding from any crowdfunding platform. And this is due to the regulation in Europe, or also specifically more in Germany in our case. The use of funds that is allowed is never refinancing of loans. So this is something that is very clear. It is always about growth, financing, so of working capital or capex. And one of the examples I first worked on when I joined Bettervest is coming to us from Uganda, specifically the company Bio Innovations, which is one of our successful case studies. The company had already a very good, efficient operation, and was looking to scale by purchasing assets, and that will allow them to reach more clients. So as you can see here, the use of funds was specifically production of alternative biomass briquettes for cooking and heating, manufacturing of biomass briquette-powered heating devices, and also purchase of 2 other assets that are helpful and useful, essential to the operation. So this is an example of what the business models we worked with in the past, in the recent past, in the last few months. The funding target of this specific project was 281,000 euros. And the duration, we did it in different tranches. So that's also possible to do, what we do is we work with the project owner to understand their financing needs for the next 2 years. And then we do it sometimes in tranches, so that the company has a lower also burden in terms of repayment schedule. The annual interest rate that was offered to the crowd was between 7.2 and 7.8%. And this was key actually to making this project or this crowdfunding project a success, because the investors, they can have positive impact and support the projects they believe in, but also it's very important for investors to get a good return on their funds. One of the topics also I wanted to talk about is the need for risk mitigation measures. So when you're trying to work with crowdfunding companies, usually each company will have its specific set of requirements, and this includes, of course, the sometimes which business models they market or they work with, but one of the key factors that can make crowdfunding project successful is the presence of risk mitigation measures. This is very reassuring to investors and allows them to invest higher amounts into the companies. Bioinnovations was one of the recent examples we had in the last 3 months, but also we have an example coming from Zambia, also in eCooking solutions. Specifically, this one is in the production and marketing of energy efficient biomass cook stoves. Specifically, the technology was microgasification. Yeah. And the funding target is 200,000 euros with a duration of 5 years. This example also, I think, gives you an idea about the use of funds that was allowed, the impact as well, and again, the risk mitigation measures that were provided by the project owner. I think, yeah, if you have, this is the main topics I wanted to discuss, but I think also I would like to maybe share with you more specifically the project requirements that are requested whenever a company applies to qualify for a crowdfunding loan. Should I share the presentation that I have? Should I share the document that I have about the requirements? Hello?
Yes, we can hear you.
Okay, yeah, so I will share. Do you see now my screen?
Yes, we can.
So you see the financing requirements, right?
No. I think I'm still sharing mine. Let me stop sharing.
Okay. Cyprus, maybe
Okay.
could you share actually, because my camera is not sharing, I'm not able to share for some reason. Would you be able to share the project requirement documents that I shared with you earlier today?
Okay, I think it wasn't sharing because mine was still up. Can you try sharing again as I?
Okay, yes, of course.
Try as well.
Is it working now?
No, not yet.
I've had this issue, unfortunately, sometimes with Teams because I only use it on the browser. But that's fine. I wanted to show the document, but I can also circulate it later. And in the meantime, I can give a brief, let's say, list briefly the main requirements to help entrepreneurs also see where they are in the process, let's say, or if they qualify for such crowdfunding loans. The first requirement for Bettervest is that the project would save CO2 or equivalent, and that it helps in the efficient use of resources. So that's the first one. I think this one fits directly already with most of the, if not all of the entrepreneurs who are with us. Also, excuse me. I will continue the presentation. I'm not sure if you are talking to me or if it's background noise. So the company, the first also very important, let's say, requirements, and that as also when I'm working with project owners and doing my client acquisition work, I always run into this first requirement. Unfortunately, we have a process where we only finance companies that have been in business for 3 years. We do make sometimes one exceptions, yes, perfect, thank you. exceptions if the company has a parent company that would provide a corporate guarantee. But usually what we work with is 3 years in business, so that we can provide also, so that our due diligence officers can have a good overview of the company and its performance. So this is one of the first things we look at, the number of years in the business, but also whether or not the business model is proven, you know. So Bettervest and most other crowdfunding platforms as well do not finance technologies that are very new, that did not have a proof of concept. That's in eCooking sector in Uganda and also in Kenya. What we've seen now from the few projects we did is that the companies are using stable business models that are proven, so that should hopefully not be an issue for you. Then there's also the requirements about management. We look at the team, whether it's solid or not. And this requirement about the minimum funding volume of 300,000 euros is actually waived occasionally for companies in Kenya and Uganda that are in the eCooking sector, given the grant that we managed to secure to support the eCooking sector. Then we also require that the project owner can commit around 10% at least of the funding required for the new project. Yeah, this is also to align or to show that the project owner is aligned in their interests with the investors that are also contributing the larger portion of the loan, let's say. The financials. Okay, so these are more into details, but what we require in terms of documentation from project owners is the last 3 audit financial statements, a financial model that is projecting the business situation for at least 3 or 5 years. Yeah. I would be very happy to answer any questions you have, because there's so much detail that I can go into, but I would also prefer if you have specific questions that I can answer about access to loans or how it works or the timeline. Yeah, these are all questions that I can also happily answer, hopefully. I just noticed my camera was off.
Yeah, thank you, Emna.
Thank you.
Yeah, okay. So I think Emna has done a wonderful presentation. So we are moving to the Q&A session, and my colleague Maureen Tekemo is going to take us through that. So Maureen, please take over the discussion.
Yeah, thank you so much, Cyprus, and thank you so much, the presenter, for the very informative presentation. And I would like to open up for someone who has a quick question. If you can raise your hand. We want to open the session for questions. Do we have someone who has a quick question right now? Fabio, you can go.
Yes, hello.
Yeah.
Yes, can you hear me?
Yes, we can hear.
Yes, thank you very much, Emna, for your presentation. Max, for organizing this. I have a question regarding the requirements. Do you have a waiver on the years of operation? We are a young startup. We have been in business for a year and a half, and we have already some traction. Just wondering if those 3 years could be somehow adjusted. Thank you.
Yes, Fabio, thank you for the question. So specifically, we can waive this specific requirement only if there is a parent company that has already been working with this business model already for a few years, you know. So if the company is, for example, was started in another country We had cases, not in eCooking, but in other project sectors, where the project was already in Rwanda, and then they are starting in a new country as well. So the new entity that is the borrower does not have 3 years in operations, but the parent company who is providing the guarantee does have more than 3 years in operations. Does that answer your question?
Yes, thank you.
Thank you.
Thank you, Fabio. I think I've also seen a question from Anthony. Anthony, do you want to speak to your question? Is Anthony still here? Okay, Geoffrey, I can see your hand. You can unmute and go ahead.
Yes, I just wanted to find out whether a guarantee from an external party would help to close a deal.
Yes, thank you very much for this question, Geoffrey. This is true, and we've done many projects like this, where a guarantee from an external solid partner, sometimes even a supplier, was presented and accepted for the projects. This is part of the due diligence process later. So our team looks at the proposed guarantees and can accept such guarantees. Yes, sure.
Thank you.
Thank you, Geoffrey. I can also see a question from Michael Francis. Is Michael here with us? Michael? If Michael is not here, I can see Peter. Peter Nicholas.
Hi, yes, it's Peter Weston here. I'm from Energy for Impact. Thank you, Emna, for your presentation, and thank you for your kind words. I just wanted to check whether Bettervest is still funding clean cooking projects secured on carbon credits, because one of the big advantages of carbon credits is they're in hard currency. So that obviously reduces the risk for investors, and you've done things in the past in that area. Is that something you're still looking at? Thank you.
I would have to clarify this with our management, actually, because we've been discussing this topic now. We did not have a specific case in the last few months, but this is something that I can also get back to you on. We do have projects, though, that we finance that have partial revenues from carbon credits, not the specific focus of the company, though.
Thank you. I can see a question from, oh, sorry. Go ahead. Emna, did you want to say something?
Yes, I see a few questions actually also in the chat, you know. Or I think Geoffrey also has a question.
Yeah, there's one from Rosia. Rosia, are you here?
Yeah, I am here, but Peter already asked the question about carbon credits, so that's fine. I have two more questions. Is this only Kenya? You said it's eCooking in Kenya or eCooking in East Africa? It wasn't very clear.
We have Kenya and Uganda for the Energy for Impact grant.
Oh, okay. So Kenya
Yes.
and Uganda for eCooking.
Yes.
Okay,
Yeah.
great. And then my last question is the currency hedging. Is there any agreements with anyone, MFX, one of these guys? No, nothing.
No.
Okay.
No, it's not done on our side. It is usually the companies that.
Yeah, and your tenors tend to be you said 4 to 6 years. Is that what you said?
Yes, it can be officially, according to the regulator in Germany, we have 1 to 8 years possible terms. But in practice, what we've been working with and what we've seen works very well also with investors is 3 to 6 years. What we've seen from many years in business at Bettervest is that statistically, the speed of funding, if the project has a very long tenure, above 6 years is very like heavily impacted, let's say. So we try to keep the term between 3 and 6 years, and that's what we've seen works very well with investors.
Okay, thank you.
Thank you.
Thanks.
Okay, thank you for the questions. Do we have any other? I think we still have time.
Yes.
Yes, I can see Thomas. Let's go ahead.
Yes, hi Emna, this is Thomas from E4I as well.
Hi.
Just wanted to ask you a question if you have seen a difference in between the tickets that you do for clean cooking that are slightly smaller to 100,000 euros compared to the usual one of 3,000 euros. Have you seen a difference in terms of the behaviors of the investors and the risk perception? And is there actually a difference, an actual risk difference in between these smaller operations and bigger ones?
Yes, thank you very much, Thomas, for the question. The project we worked on so far in with a smaller size of ticket, around 100,000 euros, what we've seen is actually they've been filled out very quickly. The investors are very interested in them, and one of the project was filled out in less than 3 weeks, literally. The reason investors are also very interested in such projects is because they closed very quickly, and so the interest begins very early on for the. So as an investor, I start receiving interest on my invested amount very quickly because the loan is closed fast. What we've seen when we did bigger size tickets, even like 300 or 500,000 euros, we tried to do it better in tranches to also keep this momentum, you know, in the project and keep the investors, let's say, hungry for the project. Also, in terms of risk, they are better received because we also provided, you know, mitigation measures that are covering almost the whole amount of the loan, and also the term was quite, let's say, attractive to investors. So definitely, yes. To sum up, Thomas, it was very interesting for us and for investors to work on these smaller ticket size projects.
Okay, thank you.
Thank you. I see a question from Michael Francis.
Yes, good morning.
Good morning.
My name is Michael Francis. I wanted to understand the types of securities that Bettervest require, and if they think that is favorable for small companies like the ones we have around. And
I understood.
last one, if SBLC is also part of the securities that you require.
Sorry, I did not get the last part of the question.
Say that again?
I did not get the last part of your question.
I had put it on the chat.
Okay, let me look for it. Okay, yeah, sure. Yes, sure. Okay, so to answer the first question you had here in the chat is how long does it take a company to secure a loan from Bettervest? This is a very good question because I also wanted to touch up on the process, the timeline, how long it takes, who are the stakeholders involved, to better, to have a more realistic or let's say practical view of the funding process. So what the first step in obtaining or applying for a crowdfunding loan through a crowdfunding platform is the sales process. So with me, we discuss, I collect the required documentation, which is the audited financial statements, the financial model, registration and documents of the company. Then we discuss according to the requirements of Bettervest, which were kindly shared also by Cypros in the chat. You can download that PDF to keep it. We discuss through the requirements. Then if the company matches also these requirements, we move to the next step. We make an offer. So this offer would specify the term, the conditions, also the securities needed, or that the project owner offers or proposes to the investors. Then we start the due diligence process. The due diligence process is what takes most time for us in the process, because of course we have a duty towards our investors to present only the most viable and good projects, let's say, and also to provide sizes of loans that the company can actually comfortably and without impacting its profitability service. So this takes around 2 months, let's say, the due diligence. And what we've been doing also recently is we try to, while the due diligence is ongoing, we try to also work on trying to get the use of funds clear and specific for the application to the regulator. Because once we have a green light from the due diligence officer, so this is within, let's say, 2 months of our first offer. We discuss the offer, then there's about 2 months until the result of the financial due diligence process. The next step is, if the light is green, of course, is to apply for the approval from the regulator here in Germany. This, however, is not the case for the smaller projects that are under 100,000 euros. And this is why also this is particularly interesting, I think, for all participants here, because the process can then go a lot faster, because we don't need the regulatory approval. We do the financial due diligence on our side, and then also do a discussion between management that specifies the let's say the final conditions and securities needed for this loan to give us confidence that this is a good product to investors. And this is also why we started the SPV in Kenya, because it allows us to reduce the costs for the project owners. It does not make sense for a project that is smaller to pay, you know, a large amount, a large fee for the SPV costs every year in Germany. So we do it in Kenya. After we do this, let's say regulatory approval application for the large projects, again, for larger than 100,000 euros, there's around another 2 months, sometimes even 3 months for this process. It really depends on how fast we get the response from the regulator. So it is quite, a process where we need the project owner to be very responsive to provide quality documents, specifically the financial model they provide us with. We need them to be specific also with their use of funds. So it's really teamwork. Once we get the sales process is done, once we have an offer and we're starting due diligence and we're starting later on, hopefully, the regulatory application for approval, it's really about being a good team between the Bettervest, let's say, and the project owner. We've had some difficulties in the past where the company does not provide very good quality of documents, and then there's a lot of good back and forth, Of course, we are open to support. Also, we give feedback on such documentation that is required and needed for the process. But yeah, there's, let's say, it's a lot of teamwork. So I would say for a small project that is under 100,000 euros, it goes up to, let's say, 100,000 euros. It goes quite fast, can be around 3 months from the first day of contact until the day the project is online, sometimes less. But for bigger projects, it's more around 5 to 6 months from the first day of contact to the day we can bring the project hopefully online. I think this answers, Michael, the first part of your question. Then I would also answer your question about what type of securities you require from companies, and do you think the conditions you have created are favorable to small companies that are at early stage? Yes. Okay, so the securities we require are not for us, clearly they are for the investors. And the requirements listed in the PDF we shared with you are the result of many years of trial and error also. We saw what works, what does not work. We saw what can be also, implemented specifically in each country we are active in. And the securities we require are, first of all, for all projects, there's a pledge of the assets to be financed. So any assets that will be financed by the loan requested will be pledged also to the investors. Specifically, they will be pledged to the SPV, actually, between the investors and the final project owner. But of course, the SPV, the goal of the SPV was to provide security to the investors in the end, in case of non-repayment. We've had very few cases where we did not have, or we had issues with late repayment or something like this. And also this is partially because we do take our time with the due diligence. We do take our time with supporting the company in understanding, also sometimes adjusting the size of the loan, that they should apply for now, And sometimes we have companies that also come back later, sometimes within another 6 months to request another loan. I think the conditions we have created are favorable to small companies, and we can see this with the size of companies that are coming more and more to work with Bettervest, let's say. They are small companies, but they are very good, have very good leadership, what we've seen, professional staff, and they know what they're doing. So I think we did not face any resistance so far, or very little resistance so far to provide securities, because these companies, they know what they're doing, and they feel confident that they can provide the securities we request. Another type we requested is also, as I think another participant asked the question about guarantee from third parties. That's also available. I think that was one of the ways we managed to help companies that are still at early stage provide securities and access funding to grow. I hope this answered your question, Michael. Let me know.
You have one final one. Is SBL guarantee also part of
Apologies, Michael. Duncan, would you kindly, yes, mute yourself. Thank you. Michael, would you please say again? Come again.
SBLC or bank guarantee is part of the securities that you require.
Bank guarantees, you said?
Yes.
What do you mean?
Can I use bank guarantee to secure my loan from Bettervest?
In which form? A letter of, how is it called? Letter of, no, we haven't done this yet, no.
Okay.
I'm trying to look if there are other questions in the meantime. I don't see any hand raised.
Yeah, just checking if we have any other questions before we close up. Do we have any other questions?
Someone asked where the PDF is posted. It is posted in the meeting chat. Actually, if you scroll a bit above, you will find it. Yeah.
Yeah, so thank you so much, everyone. If we don't have any other questions, then I think we can just say it's been a learning process for every one of us. It's very informative. Thanks to Emna for opening up and sharing all that information. I think from the questions, there seems to be people who are really interested. So yeah, would want now to give it back to Cyprus. Maybe if you have anything to announce. or if it's a wrap, then thank you, everyone.
Yes. Maureen and Cyprus, if I could say one last
Yes,
thing, maybe.
yes,
Yes.
thank you.
Because also this, this dialogue is really focused on e-cooking sector. And I feel also from the questions that we received in the chat that most companies have a concern about whether or not, how much time first such a loan would take to raise, and also they have, it seems, questions about securities and whether or not this can enable them to access such crowdfunding. The first thing to know is that for the timeline, specifically for the e-cooking sector in Kenya and Uganda, this can go faster than usual. So this is something I touched upon earlier, but I wanted to summarize it because if we use the SPV in Kenya, we can do smaller ticket loans of up to 100,000 euros that do not need regulatory, application and waiting for the approval. So that all of that is done internally through a due diligence process. Then we can go online already if the light is green with the project. And for this size of ticket, we also have, for this cooking sector, we have our partner, also Thomas is here, Energy for Impact, that can help us also work on smaller size projects. So this is about the timeline. It can be shorter. I encourage project owners that have an interest in debt financing through crowdfunding to reach out to us, to ask their questions, to also, if you feel that maybe you do not satisfy one or two of the requirement conditions, we can also have a discussion and see for your specific case what can be done to remedy this, let's say. And the second point I wanted to touch on is, the securities. The securities are really a case per case, and our goal as a company is to help innovative project owners grow and scale their impact. So this is also a discussion case per case. What I provided is, of course, the general guidelines for most projects. We then take a look into the specific of each one and try to determine if they are ready now for to meet the requirements, or also we are happy to stay in touch with them. And, many, like in my work in sales, what we do sometimes, I realize the company is great, but unfortunately they don't meet one very important requirement. For example, what we do is we stay in touch, we reach out, or they also reach out to us once they meet their requirements. And I think this is also one of the key points of this dialogue, helping build this relationship where we give the big vision of where we're going, what are the requirements to be met, even if they're not met today, and help the project owner scale their impact and have a vision, what they need to achieve or prepare in terms of documents to get access to this kind of financing. I thank you very much, Cyprus, and also Maureen, for moderating the dialogue. I thank all the participants for their questions, and I hope I answered them to the best of my ability. Yes, I will share my contact. I will be happy to share my contact here in the chat. And thank you very much.
Yeah, thank you, Emna. I think my colleague Maureen has already said it all. This session was really informative, and as people were championing for people to transition to clean cooking, e-cooking specifically, it's very clear to us that this collaboration between financiers, innovators, and even entrepreneurs, policymakers within the sector is really crucial for us to be able to accelerate the process. So we would only like to encourage the community of practice, people who are championing for clean cooking, to take advantage of such partnerships, such opportunities, to enable them to accelerate some of their initiatives. So I think we've exhausted, but I've also noticed that there's quite a number of people who have joined towards the end. Yeah, I'm literally trying to admit some right now. And unfortunately, we are closing the session. It was a very precise presentation, straight to the point. We really appreciate that. And we like to encourage the community of practice and even the people who have joined us and you're not in the community of practice. We've shared the link for joining the group on the chat. Please use that link to join the chat, but we also promise to share this recording so that if you joined towards the end, you'll be able to catch what the discussion was about. But yeah, we are really, really thankful for you for taking the opportunity to share with us about Bettervest and the opportunities you have for the clean cooking sector. And also, Maureen, we thank you for supporting the moderation process. And of course, very important people at the community of practice. We thank you for creating time to join the session today, and we hope to see you in the next session. Otherwise, I think our session has come to an end, and we'd like to wish everyone a good afternoon, and we will share the recordings and the presentations. Thank you.
Thank you.
Yeah.
Thank you. Have a good day. Bye.
Ended the meeting for all because watu wengine